We all know personal credit is essential, and it can be built in an effective fashion without going into debt. We're going to be covering one of the most unique credit builder loans I've seen in the financial space thus far, covering the financial institution that Forbes is calling one of the best banks in the country that's providing this credit builder loan, talking about the benefits of this credit builder loan, and ultimately deciding if it's even worth it for those who may need it. So before we get into the details about this financial institution and this credit builder loan, I want to give you my introduction. I'm JP. I am a career financial services professional, a banker by trade, 13 plus year veteran in the industry. I have an active mortgage license. I have an active FINRA investments license, an active life insurance license, and I'm a small business specialist, assisting small businesses with their banking, cash flow, and lending needs. I help consumers as well, anybody from just starting out all the way up to 6, 7, and occasionally 8 figures in net worth. My goal on this channel is to help give you the information that you need to maximize the financial resources available to you in this country. So you're getting this information from somebody who's advanced their own personal finances from a very bad place. Also somebody who has career professional experience day in and day out helping consumers and small business owners just like yourself advance their personal and small business finances. So it's very important when you're building your personal credit to have a plan in place. That is the healthiest way to go about it to minimize the bumps and bruises along the way of developing your personal credit. And I've been a big advocate that if you focus and put a plan together, you can absolutely build a pretty substantial credit profile without ever actually going into debt to do it. One of the lending products we're going to go over today is a credit builder loan by a financial institution that demonstrates just how that can be done. So this institution is going to be First Source Bank. Forbes is calling this financial institution one of the best in the country as of the time of this recording, which is August 2024. This is going to be a financial institution that is headquartered and centered in northern Indiana and southwestern Michigan area. This institution has been around since 1863, so quite a long time. And it also is going to be a financial institution that has about 5 billion or a little over 5 billion in assets as of about 2017, some of the most recent data I saw on this institution. So relatively small, but still a decent sized financial institution. You know, we're talking about an institution that has around 79 banking centers. So rather substantial given that it is more of a community regional bank. Now, that having been said, this financial institution does offer personal banking products, checking, savings accounts. They offer various borrowing options. So when you think personal loans, home loans, mortgages, auto loans, they also offer one of my favorite sections is planning. So wealth management and planning tools. So they're offering certificates of deposit, wealth management, insurance, and investing tools. Now, just for a quick context on the previous bank review video that I did, that financial institution, I pointed out in that video how unique their CD interest rate payments were. So basically the earnings, the APY that you can earn on a previous institution was going up to 4% out to 5 years. And I said at the time of that recording how exceptional that was. If we look at the CD products, the rates on their current CDs for this financial institution, it drives home that point. When you look at anything beyond 13 months, everything is under 1% for this financial institution. 13 months is 4.3. So as I've discussed, rates are on the trend downward. So just to give some quick context on this, when you look out and think 5 years from now, when the Federal Reserve at the time of this recording is projecting cutting interest rates the next 2.5 to 3 years, when you look at a financial institution that's offering 4% 5 years out from now in a climate that may not have rates anywhere near 4%, it's quite exceptional. And I wanted to point that out by looking at a separate financial institution to compare it to. Now let's take a quick look at this credit builder loan. If we are going under the personal section and look under the borrowing and their personal loan options, you'll see that they have a pretty broad range of borrowing and lending products. So they have auto loans, general purpose loans, home improvement loans, home equity line of credit, home equity loan, and you can see here they have a credit builder loan. So when we take a look at the credit builder loan, this is one of those examples that I've been laying out on this channel about how you can build personal credit without actually going into debt. Let's look at how this loan is structured. This lending product is structured to help you build your credit without you actually getting your hands on any debt. So they describe you receive a loan for a certain amount of money. Let's say it's $1,000. Instead of receiving the money right away and then taking payments, it is placed into an account. You make payments until you're equaled the amount of the loan. Then you can access the money. Your payments are reported to the credit agencies just like a regular loan. helping you to establish or build your credit score. When all of the payments are made, you will also get credit for paying off the loan. So the concept is basically you're going to get approved for this loan. They're going to take $1,000, put it into an existing account. You're going to then make agreed upon payments, which we find out in the FAQs. There's up to 36-month terms on this product. So you set up your payment terms, you're making your payments, and that money opens up as you make your payments. Once the final payment is made, they also clarify that you end up getting your money back. So their goal is to help you establish your credit score or build out your credit while helping you save money. So essentially, you're not really actually getting your hands on this $1,000 to use in any capacity. It's really being set aside and you're making payments, stacking up your own money, and it's being reported to the credit agencies as loan payments. So you're developing installment history, building out your credit score, and you're not actually getting your hands on any capital that isn't yours to burn or, make any bad decisions with per se or take any risk. So this is another one of those opportunities where you can build out your credit without having to go into actual debt to do so. Now, I wasn't able to find any rate sheet to clarify what this loan product might cost. Usually with financial products like this, it's not very high interest at all. 2% is very common, something in that range, but I can't quote this for this institution because I wasn't able to find a rate sheet. Now, here's where we determine if this type of loan product makes sense. This type of credit building product makes sense. Because when I dug into the FAQs again, we found out $1,000 is the minimum. So you have to have a reasonable amount of flexibility with your cash payments on a monthly basis to afford to make the payments, even over the course of 36 months, on a minimum of $1,000. More importantly, when asked the question, will they do a credit check to qualify for this product? It is described that yes, there will be a credit check, a hard pull for this product. Now, I'll be honest with you, I'm not a fan of hard credit pulls on credit builder products. It doesn't make a lot of sense to me, especially the way these products are structured. The bank is typically not taking any risk. Most times they're either securing it against some kind of existing equal level collateral, or your cash is already in the deal, or in this case, you're just making payments, into a particular account. The payments are being drafted, and at the end of the day, you're just getting your money back, and the payments are being reported. There's no real risk for the bank necessarily. Now, I've talked to financial institutions about this other institutions. First Tech is another good example of a financial institution or credit union that hard pulls for their secure loan. And they've tried to give the response back that there's still, potential for risk or, etc. My personal 2 cents on this is you have to make sure that this makes sense for you. If this is one of the financial institutions you're banking with and you just want to exercise this product to expand a relationship with them, then the hard pull could be worth it if you have longer term plans with this financial institution. But if you're just looking to do credit building for the sake of credit building and you're not committed to this financial institution, I don't think it makes any sense to get your credit hard pulled to qualify for a credit builder loan. You're given a propensity to judge or potentially decline me for the same reason I'm applying for the loan, which is to build credit. So I wanted to put context on this because, for one, the goal is to try to introduce more financial institutions that don't get a ton of spotlight, and all of the unique lending and banking products and financial resource products that are out there that many of us don't know are there that we can take advantage of to advance our personal and small business finances. Beyond that, it's important to know how to bank, how to make these decisions on using these products. Do these products fit for us? Not just following the marketing, not just following the way it's being positioned to us, but actually analyzing it top to bottom, inside and out, and saying, this makes sense for me now and in the long run. This is one of those products that if you're not committed to this financial institution and just looking to build out a banking history with them and a relationship banking framework where you can borrow from them on a deeper level down the line and expand, then I personally don't think this is worth it. There's too many other credit builder products out there that don't require hard pulls, that have similar structures where you can just make payments, get the credit history reported, and still not have to get your credit hard pulled to do so. Now, one last quick thought on this topic. This is a mainstream financial institution. So when you think about Chime, Self Inc., and some of these other fintech institutions, they don't usually hold the weight on your credit report that a mainstream brick and mortar financial institution can. So for whatever weight that might carry on your credit report, then you might want to consider it. But to be honest, I don't think it's a big big enough deficit in value on your credit report, literally we're just building data points. It's not like this is going to be the only trade line on your credit report for the life of your credit report. So I still don't even think that one holds enough weight, but I did want to point out it does make a difference when you are going to the Amexes, the Chase Banks, and you're trying to get that first credit card or next credit card or credit limit increase. They're doing a comparable credit analysis and they're looking at your credit report, and you have a bunch of fintechs and, off-brand finance companies, etc. It doesn't look as good in their eyes as an equivalent or at least respectable, comparable financial institution on your credit report. But just wanted to bring this one in just as another bank review, just a breeze through this one on as far as this financial institution, and just highlighting the unique financial products these different institutions have, and just giving you a framework or a blueprint on how to select these products, how to bank with these institutions in a way that's advantageous to you, and you're not just being steered or marketed into something that isn't the best option for you. So I just wanted to use this as an educational moment. I want you to comment down below and let me know, have you used any type of credit builder products in recent years or at any point in your life? And what's your thoughts about the concept of them hard pulling on basically secure products, these low risk to no risk products? Comment down below. Let me know if you live anywhere in the region of Indiana or Michigan, or if you've got another financial institution that this institution kind of reminds you of. Comment down below. Other than that, to all of my pioneers, welcome back. To my new viewers, welcome in. I appreciate every single one of you. I want you to like, comment, share, and subscribe to support this channel so this channel can continue to support and invest in you. As always, I want you to stay focused, stay in motion. I'll see y'all soon.